Paul.
Take a seat. Good morning, Sydney. How are we doing? I'm excited to be here, guys. I've got some amazing things to share with you that will add value to your business and your life. I'm grateful to my friend Tony that we could come together and actually form the Global Accounting Advisors. So, what is this Global Accounting Advisors? In this essence, guys, we're accountants. So don't hold that against us. We're not your typical accountants. And I'll explain that in a moment. But we're more than accountants. We're tax experts, business strategists, and advisors, and CFOs, virtual CFOs, which I'll explain more in a second. So, Tony handpicked a number of accounting firms from around the globe, US, UK, and in Australia, they've picked us. And I actually train the US and the UK, so it's one up for the Aussies. They have to follow our way. Anyway, so why did we actually form this? So when I met Tony through the Platinum program, I sat down with him and he wanted to understand what I did. So I explained to him, in the last 13 years in my business, every prospective client that would come across my desk, I would do a free review. So I explained to him over the last 2 to 4 years of their tax returns, I would get them and I would do a free review for them. And I explained to Tony, I'd check if they'd overpaid tax and if they were incorrectly structured. I then went on to tell Tony that every one of those people, every one in the last 13 years, overpaid tax or was incorrectly structured. The part that he pulled his hair out, 76% of these people paid double the tax they should have. So he went crazy. And you know, he talks about, it's not how much you make. I mean, you can have the best business in the world and make so much profit and give half away and some. It's what you're left with. So, I just came back from Sun Valley in February, March, and it was the Wealth Platinum program. And they talked about compounding interest. So everyone knows who Albert Einstein is. You know, the eighth wonder of the world is the compounding interest. What's amazing, everyone talks about compounding interest from making money. The effect of compounding when you compound interest and it keeps compounding and compounding. Have a think about the compounding effect of tax. If you've paid $1,000, $10,000, $50,000, $100,000, $500,000 more in 1 year. Imagine the compounding effect year after year after year. This is the pain point and why Tony and I came together. So we formed the Global Accounting Advisors because Tony wanted his business mastery participants to get that second opinion of their tax position to see if they've overpaid tax or if they're correctly structured. And Tony applies this in every part of his life. He talked about it. You've seen it in his health, in every part of his life. So we came together to do that. And what he loved was there's no downside here. For the participants coming to the event, they get to see, have they paid the right amount of tax? Can they get money back? And how do they structure it going forward that way? And that's the part why we did it. And the results have been extraordinary. I've done 6 events with Tony, and I've done this at 6 events. And I'll show you some examples in a moment. So, what's the approach we take? There's this thing I call the Super 7. So there's 7 things that we do for our clients. Tax, we guarantee you'll pay the least amount of tax legally possible. And you go, how can you guarantee it? I'll get to it in a second. Not only do we make sure you're structured right for tax, but making sure that your structure's right from an asset protection point of view. You don't want to make as much money, keep it, and then give it away to someone who's going to sue you. Make sense? Hello? Yeah. After that, cash flow. It's the lifeblood of a business. Whose cash flow in their business here could be better? Put your hand up if your cash flow in your business. If you don't put your hand up, it's bullshit. Because every person's business can have better cash flow. So we help our clients show them where the money's gone and how to plan for it going forward. The next one is profits. How do we actually help them make more money? Every business has a different driver and a different KPI to my business, an accounting business. It's got a different critical driver to your business. So we help them work out the 3 to 4 things, not many, that they need to focus on. The next thing is growth. 6 years ago, it changed my life. I went through this vision project where I got super clear on the vision of the business, values, and the staff go, where do I fit in? You do that, it actually helped me build a real business, go from an operator to an owner. And I did this event 6 years ago, and it truly, truly ignited me to go forward. I went from the operator to the owner, and I went through that process. The next thing, wealth. I won't go into it, but I've got 4 buckets that I allocate all my wealth into. Security bucket, cash flow bucket, growth bucket, and lifestyle bucket. And you'll see it later on. Tony will talk about it. So we help our clients with the number 1 decision of asset allocation. And the last thing is retirement, exit. What's the exit look like? Tony talks about it as well. If you don't have an exit, mate, you're not planning well enough. But today, I'm here to talk to you about the first 2, tax and asset protection. So I said before, how do I guarantee you'll pay the least amount of tax legally possible? What's the approach? How do we do it? But before I do that, I just wanted to give you a little bit of a fact that you may or may not know. Do you know when you go to your accountant and you give them your tax or your books and they do your tax work and then you sign it and you submit it to the tax office? That's called self-assessment. You're effectively saying, I think I've got to pay this much tax. So, if you've overpaid tax, you can actually go back. The legislation allows you to go back 2 years if your turnover's under 2 million, and allowed to go back 4 years if your turnover's over 2 million. So, are we with me? Self-assessment. So, that's why I go back 2 to 4 years when I mentioned it before. So here's the approach we take. Number 1, I need to know everything about you. I want to know everything about mum, dad, brothers, sisters, Tom, Dick and Harry. Now, I don't want to know what you're doing in the bedroom, but I want to know everything else. And what we do is map it out. We do a family tree. I want to know everything about the family. Yesterday, I met with a couple, and I asked them a couple more questions about their parents, and they know who I'm talking about. But they went, why are you asking me that? Because it actually helps you with tax. So we map out the whole family tree. Then we map out the whole business structure and investment structure. So I now have 2 diagrammatics of your whole life. I know it better than you guys. And then we apply the law strategically for your personal circumstances. We ask deeper questions. This is the part that we do, and we review it. I come back to you and tell you the good, the bad, the ugly. Here's how much you've overpaid. Here's how much you're going to get back. Here's how much you're going to save going forward that way. I give them recommendations. We amend the returns. We restructure them, and they go forward. I said before, the results have been extraordinary. I've done it for 13 years. So I'll tell you the biggest one. I got a referral to a client in Tasmania. Went and saw him and started. Mud mapped the whole family tree and business structure. Holy shit, it was so complicated, but I mapped it all out. I knew it better than him. Wait for it. Did the review, asked deeper, more questions. We found out that he overpaid $980,000 in tax. So imagine now, I've done this review, and I go to you and I say, you've overpaid $980,000. What do you think his first reaction was? He didn't kiss me, he said, bullshit. He was skeptical, he didn't believe it. He said, give it to me in writing. Normally I wouldn't give it to him in writing because 2 reasons. One, he'll just take it to his accountant and he'll tell his accountant to do it. And number 2, I thought, you know what? I actually did give it to him in writing because I thought, you know what? If he does do that, then we're not a match. We shouldn't be working together. But I backed myself and I knew the accountant stuffed up big time. So anyway, gave it to him in writing. He went to his accountant, showed the accountant, and the accountant said, no, you can't do that. There's 2 tax rulings that don't allow you to do that. So when there's $1 million on the line, what do you think the guy did? He went and got these 2 rulings that the accountant said you couldn't do it and read them. And they had nothing to do with the advice I gave him. So I'm going to show you in a moment a strategy that Tony, one of the frameworks Tony uses. So this was 4 years ago. He got back his $980,000 and we restructured him. He saved $300,000 a year forever. Now this guy was making good profit, big money. And he went and bought a Tesla straight away, which wasn't exciting. But anyway, but to give you another example, I was in Fiji with my family. I'm married, I've got four beautiful kids. And I was in Fiji and our kids connected with these other kids. And I met a family in Melbourne. And I remember the last night in dinner. So this is an environment where we're just a family who are meeting. And they told me at dinner, and it sickened me, we haven't been on a holiday for 8 years. So they had 3 beautiful kids, 8 years not on holidays, worked in construction. And I just, Paul being Paul, I asked 3 questions. What's your business? How do you take money out of it? And I can't remember the third one. I think, how you structure. That's right. They told me, and I said, you're overpaying tax about 30 to 40K. What do you think the first reaction was again? I've met these people on a personal relationship. They said, bullshit again. So what happened, I came back to Australia and I chased. And my why was, I saw this beautiful family and I thought, I've got to go and help them. Anyway, to the point that I got the information from them, did the review. She got back 35 grand and they now save 32 grand a year. And this was a family that hadn't been on holidays for 8 years. And you go, why? How is this possible? Mate, I could give you 100 different examples, but I'm going to show you real life examples. The names are taken off. These are real clients from Business Mastery last year in Melbourne. So this is how I map it out. I just go through his dad, Smith, son, daughter. I want to know everyone. I want to know what they're doing, what they're making. And here's the structure. This was an engineering business. They had a super fund. So I just map it all out. I just know all their affairs. Wait for it. Don't worry about the numbers so much. But if you look at the bottom number, these guys in 2014 overpaid $79,923. Look at the bottom number. That was 1 year. The year after, go back, the year after, they got another 79 grand back, and for this year, they got 79. The business nearly went under. When we met them, the business had no cash flow. They had ATO debts that were about $200,000, and they'd overpaid 200 grand. So that saved their business. And they came, it was amazing, just by asking more questions. We'll get to it in a second, why we do it. Here's another one. I love this one. This was like, we found out about mum and dad, father-in-laws, mother-in-laws, everybody. Here's all the kids, mapped it out. They were a helicopter logistics business, and they had a few structures. So I'm just showing you, this is the process we go through. Don't worry too much about the diagrams. This is just our internal. But watch the result. This one was a game changer. This one here, he got 37,000 in 2014. He got back 75 in 2015. That's not the exciting part. We made sure whatever we had done in 2014 and 15, he got back about 189,000 in 2016. And here's the sickening part. 7 days I missed out on, 7 days, because of the amendment period, the 2 years and 4 years, he missed out on another $204,000. And he got upset. He goes, why didn't he ask me this? But the responsibility is his. 7 days he missed out on, and all it took me just asking better questions. So, I thought at this point here, I'd give you maybe 2 minutes about me, so you can get a bit of context. So I've been doing accounting for about 20 years. Started at PricewaterhouseCoopers, got headhunted by a large firm, and I became the youngest director at 25. And I had to buy into the business. And I didn't buy into the business because my values didn't align, and I'll explain that in a second. One partner was sleeping with the other partner. They were putting their clients in the tree investments and vineyard investments, and I said, mate, I'm not part of that. So anyway, I told my truth, and they sacked me. They gave me a box, and they said, get out. It was the worst day of my life. It was like an episode out of Jerry Maguire. I was ringing all the clients, and it was crazy. It was the worst day. What I didn't tell you, I went home, and I had a 1-week-old baby at home as well. And I went home to my wife, and it was fantastic. She thought I was coming home to actually be at home to do some work. I had a box because I'd usually bring a box home. And I said to my wife, no, I'm home. I'm home permanently. What I didn't know at the time, the worst day of my life became the best day. And Tony talks about it. It was truly the worst day. But if I go back now, it was the absolute best day of my life. So 13 years ago, I started Sidcore. And everything for me, everything is about growing into my potential. For me, my staff, and my clients. So I set up Sidcore so I could change the lives of small to medium business owners by helping them grow into their potential. Because I have this belief that mum and dads, me being one of them, and business owners, live our life and identity through our business. So if I can help you build a better business, help you in business, help you build a great business, I get to change your life. We are the backbone of the economy, and we get the least amount of support. So that's why I did it, and that's why Tony and I got aligned so passionately about helping these people. And I always start with tax. So one of the biggest points of difference with us, go back 1 second. We've got clients all over Australia, and they're all different industries, from real estate to medical to professional services, retail, every industry, but they all have common themes. They're all entrepreneurs who want better for themselves, who want to create wealth, but they want better. This is our common theme with our clients. I've been in a platinum program for the last 4 years, like Scotty said, and we talked about proximity. Proximity is power. Mate, I'm a guy from Newcastle that's in partnership with Tony Robbins. Like, that's proximity. So everything I learn in those platinum programs, I come back and give it to my clients, and I give it to my staff. My staff are more important than my clients, because the more I love them, the more they love the client. Does that make sense? Are we all good? Hello? Okay, so what's our point of difference? You go, Paul, great talk. Why? What's your point of difference? It's this one card. I carry it everywhere. It's our values. Remember I said before I didn't buy into the other business because my values weren't aligned? Everything that we do, how I show up every day, how we be as a business, how we service our client, are based on 5 core values. These are our point of difference. Raw and real. Tell as it is, tell the truth, do what's right and fair. I don't sit on the fence. I'm as raw and fucking real as they get. And I tell the clients what they need to hear, not what they want to hear. But I make it about them, not about my ego or significance. It's about them. Heart and soul. Love the client, love what you do, treat it like your own. You can't plug an accountant in and say, be proactive, give me advice. You either do or you don't. Push the boundaries, innovate, work smarter, do whatever it takes to help the client. Nothing's a problem attitude. This one's internal. Don't ever leave a man down. Work as a team, play as a team, help each other. And the last one, do what you say you're going to do. Keep your promises, no excuses. Everything that we do, and we got the 3rd best place to work in the BRW magazine last year, this was a major, major reason for it. And it's all good for me to stand up here and say it, but if I didn't live it as an owner, they would leave. I haven't lost a staff member for 5 years. In accounting, it's unique. But this is the game changer, the values. The other major point of difference is this framework that Tony talks about. Strategy, story, state. Who's seen Tony talk about this before? Put your hand up if you've not seen this. So, remember the example with the $980,000 overpaid tax I talked about before? I gave him the strategy. I gave him the strategy in writing. His story didn't even let him get to the strategy. Everyone says to me, Paul, just tell me what to do to create wealth. Tell me what to do to build a real business. Tell me what to do to keep my staff. How do I engage them? I can give them the strategy, but strategy is only 20%. It's only 20%. How many weight loss programs are there? How many? Millions. How many obese people are there? Millions. Is it a lack of strategy? It's story. It's blueprint. Who you're hanging around. It's mum, dad, brother, sisters. We all have a blueprint. But find your proximity. It's massive. State. Your physiology, your focus, the language that you use. Think about it. If I've had a fight with an argument before I leave for work, how do you think my state is? I'm in a shitty state. This person's not driving fast enough. They didn't make the lights. Think about it. My day is shit. It starts with state. You're in a good state. You'll have a better story. It'll let you get to the strategy. In our business, our story is there's always a better way. Always a better way. I'm telling you, there's always. So, why aren't all accountants doing this? You're probably going, great, it sounds, why isn't my accountant doing this? There's not too many accountants that I know that have been through a Tony Robbins Platinum program for 4 years. I've spent $500,000 on self-development, and I'm telling you, it changed my life times 1,000. So there's not many people that do it and then put it into their business and give it to their clients. Number 2, I just told you, our state, our strategy, story, state. My story is there's always a better way. And I'm an entrepreneur that happened to pick accounting as the business. I love what I do. The other big one, remember I talked about the family tree and your business structure? Applying the law to your personal circumstances, it's really simple to me, really simple. But they don't do it. The law, you don't take the law literally. We take it strategically based on your circumstances. And the next one, accountants don't know their clients. They get the work in and get it out. Get it in, get it out. And accountants aren't great wealth advisors, and they don't run great businesses. I will never bag an accountant from an individual business, but I just know generally this is what they do. My model is different. I'm one owner with 60 staff. I don't have partners. I chose to build a corporate model. I went from that operator to that owner. operator to owner. Make sense? And the last one, our values. They're our values. You can copy them, you can have them, but they come from us. We actually care. I truly, truly love my staff, love my clients. If you're staff, client, or family, I'll give you an arm. If not, I'm too busy. I have 4 kids that are very active. They're crazy, like their mother. So, as a little value add today, I don't do this when we do it in the US and the UK, so this is just for the Aussies. So, these are the 11 most common ways people overpay tax. So I'm giving you the strategy. Number 1, structure. If you don't have a company and you don't have a trust, both, you are overpaying tax, period. Wages. I'm going to anchor with you today. If you take wages out of your business, you are paying too much tax. Wages equals dead tax. As soon as you pay personal tax, it's dead. I can never get it back. 3, who knows what a bucket company is? Put your hand up if you know what a bucket company is. So there's about 10 people. If you don't have a bucket company, you're paying too much tax. Family. Mum and dad, if you've got kids under 18, every kid's worth $7,000 to you a year. So you've got 3 kids, you're missing out on about $20,000 a year if you're taking wages. Okay? Under 18. So you can earn $110,000 in the business and pay 0 tax if you have mum and dad and 3 kids. Up to 150, depending on the ages of the kids, you can pay 0 tax. This is no bullshit. You come and see me, I'll show you exactly how to do it. You can take it, go and apply it tomorrow. And your kids, if you've got kids from 14 to 18, these are kids that do errands for you in the business and help you in the business. Use them. Simplified tax system. This is a really simple one. So I don't know if you knew, the government from 1 July, they've changed the thresholds. Remember before I said $2 million? So you could go back 2 years if your turnover was under 2 mil, and 4 years if your turnover was over 2 mil. They've increased that from 1 July to 10 mil now. So if your turnover, revenue sales is 10 million or over, you can go back 4 years. Under 10 mil, you can go back 2 years. I'm just explaining that. But why that's relevant, simplified tax system. Tick it on your tax return. If you're not getting an accelerated depreciation. You can write off the cars and equipment and everything else faster. It's one box. I commonly see accountants stuff this one up. Scrapping assets. I love this one. I get the depreciation report and I go through it with the client and say, do you still have these assets? No, we don't use them. We've got them, but they're in the corner. Scrap them. Scrap the assets. It's an instant tax deduction. Obsolete stock. If you've got stock that's not moving, it's greater than 6 months, value it at $1. Get rid of it, you can value it at $1. I know they're small things, but if you want to pay tax, you're in the wrong room. Truly. If you like paying tax, you are in the wrong room. Different class of shares if you've got partners in the business. I commonly see, because everyone's got personal circumstances, just know that you can have different class of shares based on partners. I love this one. So I've got clients with businesses. They make money over here, and they've got investment properties and commercial properties or other businesses that make losses over here. Profit over here, losses over here. Because of the wrong structure, or their accountant's not using it, they're not utilising the losses over here. So they pay tax over here, and they do nothing with this over here. Major downfall, major. That's just money for jam. I actually want to go back to number 6, scrapping assets. I didn't mention depreciation. Who's got an investment property? Truly, who's got an investment property? We all love property. We're Aussies. So, if you've got an investment property, you can get a depreciation report. Do you know that? You can get a depreciation report and you can write off. But what you maybe don't know, if you buy a property and you renovate it, you can get a report before you do the reno. Then you do the reno and you write off all that shit that you got the report for. And then you get another report to write off this stuff. It's a double whammy. I met a dentist last year in Melbourne, and they got back $94,000 because I went to their office and he said, my accountant's never been to our premises. And I looked around and I said, mate, when did you renovate this? Oh, we just renovated this year. I said, really? Did you get a report before? No. So you can go back, quantity surveyor gets the report, we wrote it all off. Not only did he get back 94 grand, but every year, the new stuff that he did, he just keeps writing it off. It's a little one, but it's money for jam. Over 55, if you're over 55, start getting into a transition to a retirement pension. All that means, all your super, anything that the super makes, it's tax-free. It's a little game changer. I've seen clients that are 65, they could have done it for 10 years, and they haven't done it because they never got told. And the last one, fringe benefits tax. Don't pay fringe benefits tax. There's other ways to deal with fringe benefits tax. There's two methods you can do it. You can pay it, or you can do employee contributions. Just when I see this on the P&L and people have paid fringe benefits tax, mate, you are really not working smartly. So, that was just a little value add I wanted to give you. So, I talked about it before. We do these reviews for our clients. They're now paying the least amount of tax legally possible. We set them up properly, and we become their trusted advisor. They ring us about everything, and we make that easy. We don't charge them for phone calls and emails. We want them ringing us so we can give them advice. So what happens then? We become like a virtual CFO. So remember I went through the cash flow and profits down here? Effectively, guys, businesses can't afford a CFO. So Tony and I came together to create this virtual CFO and we call it the Power CFOs. So you're going to see Keith today. Who's ever seen Keith before? You're in for a treat, truly. He'll talk through about software and go through certain things, and we're the virtual CFOs to actually help you understand the numbers and what they mean. To get a CFO in your business, it costs like 150, 300 grand. We can't afford it. We're small to medium business owners. Does that make sense? Yep. So we come up with a solution, how to actually deal with that. I won't steal his thunder. Let Keith talk about that. But what's a virtual CFO do? People go and talk about these usual, hocus pocus, beautiful terms. What do they actually do? Number one, the first thing, accruals versus cash. I know it's a funny word, accruals versus cash, but if you haven't got the right financial statements, you can't make decisions. So I see a lot of businesses that show on their profit and loss cash when they receive it and expenses when they pay it. If I did your accounting work, it's now August. If I did it in August, but you didn't pay me till December, under cash, I would show that income when? In December. But under accrual, I would have showed it in August. That's real accounting. You need to make sure you're doing accruals accounting. It's easy, but people don't understand it. So we make sure, number one, your financials are right. Number two, chart of accounts. Who uses Xero here? Anyone use Xero? Great. Who uses MYB? Great. QuickBooks? Great. The first thing I see, people get the chart of accounts, the general one, and go, yep, we'll use that one for a construction business. We make it really specific for you guys. And as small to medium business owners, we always put a lot of bullshit things through the business, don't we? A lot of yah-yah, I call it. Keith's going to call it yah-yah as well. So we as business owners, it's our right to actually claim things that we shouldn't claim. Who claims things in the business because it's great for tax? Hello? Mate, if you don't put your hand up, you're full of shit. That's truly. So what we do, we make sure that we know what's business related and what's not business related. So that for tax, we can claim it. Cars and so forth, you pimp up your lives with these things. Oh, I put it through the P&L, but I'm getting a tax deduction for it. But how's business going? So we just make sure that chart of accounts is right so that we know what business profit you're making and how much tax profit you're making. Does that make sense? It's a little thing, but it's a game changer. Forecasting and budgeting. Watch this. How many people in the room, truthfully, how many people here have a forecasted sales budget broken down monthly for the next 12 months that they drive and manage their staff and keep them accountable to? How many sales forecasts? How many people? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 people. I did this in Vegas 2 years ago. Out of 1,200 people, 20 people put their hands up. We're not good at forecasting. Can I tell you, you manage what you measure. You start telling your staff what you're measuring, they start working harder. Same with budgets. We help you get the break-even point. All I tell clients, you need to make this much money to make no money. You need to bring this much cash in from the business to make no money. It's powerful knowing one number. They know how much they've got to open their doors every day, every week. The break-even point. This is what a virtual CFO does. Cash flow analysis, like I said, it's the lifeblood of a business. We show you where the money's gone and show you how to project for it. I've saved people's asses with this, showing how much they pimped up their lives. They made $1 million. They pulled out $2 million. And you go, how does that work? They made $1 million and pulled out $2 million. That means they got in debt $1 million to fund a lifestyle. And we do. Business owners do a lot of this. They use their business to fund a lifestyle. Get this baby strong, and it'll give you a lifestyle for the rest of your life. And the last one, I told you about critical drivers. Everyone's got a different critical driver. So, where to from here? The other day, Scotty handed out the interest cards. So if you have not filled in an interest card, put your hand up. They can hand you an interest card, okay? So put your hand up and they'll hand them out. Come and see us. If you haven't made an appointment, I've seen many of you, but if you haven't, just go and see Christina. It's a 10 to 15 minute appointment. I will tell you within that 10 to 15 minutes, pretty big guide whether you're overpaying tax and how. Then I will email you after today, probably tonight, probably tomorrow, and say, can you give me these 10 things or 4 things, just last year's accounts, and I will do a free review. You have no downside. Everything is confidential. This is the part that Tony wanted to do. If you like what we do, we'll then work together. We give fixed fees, it's all transparent, but only if we're a match. Sometimes it won't be a match, and that's okay. I want to work with people who want to grow. I want people who want better for themselves. It's confidential. I said before, I did this event 6 years ago, guys. It launched my business to build from operator to an owner. Play full out. Thank you very much for your time and enjoy. Thank you.